Okay, right. Hello everyone. Welcome to the 17th class. Today we're gonna start out with talking about ethics. So we learn about the laws. We learn about so many different laws. Right? The reason that that there are laws, there are acts was to help and protect the consumers. Okay, from predatory lending, or from an ethical mortgage loan officer or mortgage loan originator, by steering, as well as redlining, like banking that they do, redlining, pick a community to serve. So a lot of that kind of involved with ethical. So we need to know about that, right? Not only need to know to help you how you're gonna serve the clients, but to make sure that you don't violate any law. Okay, right? So ethical issues, right? Um, Protect all they deal with against fraud, misrepresentation, and ethical practices of any nature. So if you're looking at this, right, fraud, right, the SAFE Act, right, misrepresentation, they're like Dodd-Frank, marketing, advertising, and some unethical practices, right, steering. So adopt a policy that will enable them to avoid errors, exaggeration, misrepresentation, or the concealment of any pertinent facts. Okay, and it's prohibited acts like including redlining. So redlining is like a discriminatory practice that puts services out of reach for residents of certain area or community based on race or ethnicity. Redlining is illegal. Okay, so redlining meaning that the lender only pick and choose the community that they think is best for their business, and they don't serve other community. Right, so that's called redlining. But also there's our lenders that's focusing and only offering product to the community that they believe are the communities that they're gonna have trouble, and then they blend it out. These borrowers run into issues, then they foreclosure their homes, and that is called reverse redlining. Okay, so meaning instead of avoiding, now they're focusing right on those community. Okay, so RESPA is a real estate settlement practice act. RESPA prohibit kickbacks for business referral related to or part of settlement services involving federal related mortgage loan, meaning that with RESPA you cannot pay back somebody money for for referral. An earned fee arrangement, splitting charges make or receive for settlement services, except for services actually performed, right? In connection with federally related mortgage loan transaction. So meaning that you just split the money with someone that not even provide any services. Okay. RESPA is also prohibit giving and accepting any portion, split, or percentage of charges made or received for real estate settlement service business, unless for service actually performed. Okay, so meaning that you cannot, giving or getting money, any amount, for the service you not perform. Okay, not provide. Let's see, kickbacks or compensation prohibit giving or accepting of kickback, including cash or any things of value. Okay, real estate agent can refer to other real estate agent for an agreed referral fee. So like I say, only realtors are able to do the kickback or referral fee by putting together like a contract. Say, okay, I give you this client right, for a 25% referral fee, right? And then you don't do anything else. Let the other person take on the client and help that client to buy a home. Okay, so with real estate, with realtor, it's okay to do that with a proper form, right? With a proper process. MLO cannot reduce the compensation to pay for borrower closing costs. Okay, that is a no-no. Okay, kickbacks, compensation, permitted or prohibited duties, affiliated business arrangement, product showcase luncheon. Okay, so if you or anyone that that offered you something, for any referral or any, the way that they try to build is they want to build your trust, they want to build your good relationship by providing you with some benefit, and that's a prohibited. Okay, one way or another, regardless of how they they make that available. Okay, referral, fairness in lending. Referral definition require disclosure. Okay, must disclose business affiliated. So if you working with any partner, you're working with any company that you have business with, you need to disclose it. Okay, a realtor referral must go through a proper referral channel by filling out real estate referral form. So we're talking about this. Coercion. This notice is commonly referred to as an anti-coercion statement and notify the borrower that the lender cannot require the borrower to make insurance through any particular insurance agent or company to protect the mortgage real property. So meaning that the lender cannot suggest or force or kind of providing some information to the affiliated company that the lender probably work with, which is providing home insurance policy. Okay, appraiser conflict of interest. Appraiser is the person that who is sending out by the lender, okay, to to appraise the property, to go through the property and see, using the 3 different types of appraisal and find out how much the home really worth. Okay, either by cost, either by bill, or either by income. Okay, cost, how much is it to to build the property, or also the common area, what are the homes are sold at, right? Or the income is how much is this home get the rental income. Using those 3 techniques is to come up with a the close enough appraised value. Okay, Mr. A better than Mr. B, and so on. Okay, all sets, all 7 different type of characteristic, right? Regardless of they marry or not, have children or not. Okay, you must treat everybody the same. Every borrower must have a chance to apply for a loan, whether they can get it or not. So like I said, if somebody come to you and ask for your help to qualify he or she to buy a home, you cannot say that looking at you, I don't think you qualify, so I don't think you should apply, right? Every borrower must have the same chance whether that person get qualified or not. Okay, you just have to help out and see if that person is qualified or not, because one way or another that person may get qualified for something. You never know. Okay, unless if that person credit history and income is not stable, and a lot of bad thing on the credit report, then yes, that person may not get the loan, but at least you try. Okay, do not discriminate based on race. So these are the 7 characteristics: race, color, religion, national origin, sex, marital status, age, receive a public assistance, or good faith exercise of any rights under Consumer Credit Protection Act. Okay, under Consumer Credit Protection Act, everybody treats the same. Okay, fraud detection, including asset, income, or employment fraud. Mortgage fraud take into two forms: fraud for profit or fraud for housing. So what is fraud for profit? Fraud for profit usually involves in industry insiders such as appraiser, brokers, loan originator. Such schemes aim to gain cash or home equity through abuse of the mortgage lending process. So meaning that the loan officer can work with the borrower and work with the appraiser, right, to either lower the price of the home or increase the price of the home to get more equity, right? So those are fraud for profit. Okay, fraud for housing primarily consists of illegal actions by borrowers motivated or to acquire or maintain ownership of a home. Fraud for housing, meaning that you say that you borrow a loan for your primary home so that you get a better rate. Instead, after you purchase the property, you rent it out on day one. So that is called fraud of housing, for housing. Okay? Mortgage fraud can occur through the action of borrowers and through the action of mortgage industry professional in connection with obtaining a mortgage loan. So like I say, fraud is not only by the borrower, it can also be from the professional as well. Professional mean mortgage loan originators. Okay, common instances of fraud committed by borrowers and mortgage industry professional include provide false information regarding employment status, income level, or employer. Believe it or not, there are some people out there that just want to buy a home. They may make up some fraud information. I say, hey, I work at this company, and maybe somebody in that company help writing you a letter or something, right? So those are fraud. Misrepresenting the source of fund for borrower down payment. Okay, so you say, okay, I have these down payment, right, 100,000, but you probably end up like get the money from somebody else. Okay, falsifying a borrower credit score and or outstanding debts and liability. This is kind of with this, it's kind of hard to nowadays to falsify the credit score or outstanding debts or liability, unless if you actually get the report yourself, and then you modify the report when you submit it. But now that everything is electronic, so even when you run the or pull the credit score, it's actually stored into the lender system, and that score got imported from let's say a credit bureau, right? The credit bureau gets the score, output it, the lender import it into their system, right? So nowadays it's kind of tough unless if you can hijack that process and then change the credit score, update some of the info. There may be some people that that does that, okay, but to me it's kind of hard to actually able to do that nowadays. Okay, misrepresenting a borrower intent to occupy the property. So this is similar to fraud for housing. Okay, you borrow a loan, you say that you're gonna live there as a primary, but eventually you rent it out. So that is misrepresenting the intent of the borrower. So if you happen to know that somebody is doing that, then you have to report it. Okay, otherwise you say, if that person say, hey, I have something I want to tell you, that you can tell right up front, say, hey, if anything you tell me that illegal, keep it to yourself, don't tell me. Okay, so at least you tell them up front that you don't want to do anything illegally. Providing false information concerning a borrower's identity. Okay, sometimes that you can fake somebody's identity, and that's a no-no. Okay, continue. using some inaccurate appraisal figures to misrepresent the true value of property. Okay. Maybe in 2008 or earlier than that, where there's not a lot of regulation that, control how, information was, protected. So there may be cases that appraiser working with, loan officer or even the buyer or seller, to modify the data, right? And that's actually changing the how much the home is worth, and it's misrepresenting. Okay, obtaining multiple loans on a single property based on false information. Okay, same thing. If you provide false information to get a loan or two, on a single property, then it's illegal. It's fraud. Uh, Believe it or not, these things are happen. There are people out there that, those are willing to do, things like that. Okay, whatever they could, touch their hands on, they do it. Providing false property information to secure modifier loan, meaning that, hey, I'm going to the bank, I want to borrow the money to buy a home, and you just give a non-existing or invalid property address. Okay, and sometimes it can go through, and then you get the money, but the property doesn't exist. So that's what it means by providing a false property information to secure a loan. Misrepresenting income, hardship, or related information to foreclosure or influence a short sale decision. So, the government is really good at helping out people with hardship, right? Loss of job, medical issues, unable to pay. So they can, they can do a loan modification, or they can get, a lot of grant for helping, right? But they really don't want that the borrower to provide like incorrect information or information that is fraud. Okay, and the most common investor mortgage fraud scheme are different types of property flipping, occupancy fraud, and the straw buyer scam. What does that mean? Property flipping. Okay, occupancy fraud. We know what occupancy fraud is. What is straw buyer scam? Okay, let me see if I have that explained in here. Okay, let me okay, one way that nowadays that you can learn is to use the chat GPT. Okay, while we're here, I'm loading up chat.openai.com. Okay, and any word in here, right, that you don't know, you can ask ChatGPT for that, or you can ask Mr. AI for that. So let me do a little demo here. I would say, what is property flipping? Okay, what is property flipping? Okay, and what ChatGPT say is, ding, 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 ding. Property flipping refers to the process of purchasing a property, often at the low price. Okay, improving it and then selling it at the higher price for profit. That's called property flipping. This strategy is commonly used in the real estate market and can involve various types of property, including residential and commercial real estate. Okay, so that's what it means by property flipping. Okay. Okay, but why is that property flipping is a fraud? Okay, let's ask ChatGPT again. Okay, why is property flipping is a fraud? You may ask, what am I doing? Right, I just actually using my phone. Right, log on to chatgpt.openai.com. Okay, I'm using this every day, to get my answer. Okay, so here what it saying. Why is property flipping is a fraud? Okay, property flipping itself is not inherently fraudulent. It is a legitimate real estate investment strategy when done ethically, and legally. However, it can become fraudulent when it involves deceptive practices or intent to defraud. Here are some way a property flipping can cross into the fraudulent territories. Inflated appraisal. So meaning the investor who are buying property and try to renovate it and then sell it, but the appraiser that appraised the property at an inflated value. So that is an issue with the property flipping, right? When multiple entity play together to try to inflate the asset value and then sell it. Okay, so that is why property flipping is illegal in that sense. False information on the loan application or undisclosed agreement or straw buyers. Okay, in here we have a straw buyer scam. Okay, what is it? Straw buyer scam using a straw buyer, a person who purchased a property on behalf of another person who would not qualify for a mortgage with false information to secure a loan is fraudulent activity. So meaning that somebody want to buy a home, but he or she does not qualify, right? And using somebody else, to help out with buying the property. So that's called straw buyer scam. Okay, air loan versus appraisal fraud. What does that mean? The most common industry professional mortgage fraud scam are air loan and appraisal fraud. An air loan is a loan obtained on a non-existing property. It's called an air loan. It's in the air, right? The home does not exist, but you try to get a loan for that non-existent home or property, okay? Or even non-existent borrower, okay? You try to write, you steal somebody else's identity, right? Or you try to get a loan for like an unknown, non-existent person, to buy a home. So air loan is talking about that. Appraisal fraud often involving a real estate agent, builder, appraiser, and loan officer working together to maximize a purchase price and loan amount in order to increase their commission. Okay, so these four entities or four characters work together in appraisal fraud, right? To gain some money, to increase their commission. Continue with fraud detection, sales contract, or application red flag. Fraud can be revealed in any part of the loan package. It's worth verifying information and looking for inconsistencies in the sales contract, okay, which is an offer letter, cancel checks, the title, right? Because somebody can sell somebody else's home, and that somebody does not on the title, right? HUD settlement statement, right? Somebody can make up numbers in the HUD or closing disclosure, okay? Income information, right? Those are the things that need to verify. And when you see the income that doesn't match, then there may be some some fraud involved or some red flag in the tax return, right? Anything can be cloned, anything can be modified, or added. Okay, assets, you may inflated your assets total worth, right? It may say that, hey, I have a couple properties, I may get some rental income, but those need to be verified. Okay, you cannot just look at the loan application, the 1003, and say, oh, this person have 3 assets, they are paid off, they get good income, but you need to verify, are those homes exist, right? If those homes exist, is this their homes, right? Or even if they they make any rental on it, because if they can make rental and break even, then it's maybe cancel it out, right? Or if you get some cash flow, yes, you can use that for income. But what happened? You don't make money, you negative, right? So those are the things that need to be verified. Occupancy fraud, primary versus rental, we'll talk about that. General red flags, verification that are completed on the same day as order or on a weekend or holiday. Okay, things like this, that also raise a red flag. policy. Okay, so meaning that, let's say if you want to buy this as the primary home, but your homeowner insurance quote or declaration page say it's for rental property. Hey, something not right here. You buy a home for your primary, but why your home rental insurance says rental, right? Doesn't match. Different mailing addresses on a bank statement, pay stub, W-2, right? Why are you living on 3 different addresses? Why are your mailing addresses are different? Shouldn't that be the same, right? So those are the red flags that that need to take into. Okay, assets are not consistent with the income. Okay, your asset in the bank checking account say you have $100,000 in saving. Okay, and seems like every month it's increased by 25%, but you only make 10,000 a month. Your income say that you only make 10,000 a month. How is that even possible? Where's this money coming from? Right? So things like that. You need to keep a lookout. Child support noted as on pay stub, but not on a loan application. So somebody is hiding something. You get a child support. Your employer knows about it, but how come you don't fill it out on the application? So those are the red flags and need explanation. If not, when it goes under the underwriter, the underwriter gonna come back and say, "Hey, what's going on here? These are don't match. I see a child support on your employer, but why is it not on the 1003? Give me an explanation for that. If you can clearly explain it why, then that's good. So I'll let it go. I'll clear that condition. If not, then I'm probably gonna just deny your loan. Okay, adverse action. Okay, continue with fraud detection. Sales contract application red flag. Continue. Fraud can be reviewed in any part of a loan package. It's worth verifying information and looking for inconsistencies in the sale contract, cancel check, title, HUD, tax return assets. Okay, I think, did I repeat this? I think I probably repeat this one. Okay, I think the only thing on this page is different is that, okay, on the right, suspicious bank and other activity information not provided to borrower. Verifying application information. Okay, 7 lender red flag to look out for. Okay, so meaning that sometimes it's fraud is not from the borrower. Yeah, maybe also fraud from the bank or lender as well. So as a borrower, or even as the loan officer that helping a borrower, you need to keep a lookout on these items. Not doing a credit check. Why is that you don't do a credit check? Right? Are you a hot money lender that actually have a lot of money that you don't care? Okay, so that's where it raises a question. Rushing you through the process. Why are you in a rush? Okay, I'm not rushing. I'm the one who buying the property. I'm the one that borrow your money. Why? I'm not rushing, but you are. Okay, making unreasonable promises. Okay, hey, I'll lend you $1 million at the 3% rate. Now it's 7%. How can you give me 3%? Offering significantly different interest rate from other lenders. Okay, why your rate is only 3% where that lender quote me at 6.5? Okay, what's different between you two? Do I pay more on your rate or do I pay the same or not even pay anything? Okay, so if I don't pay anything, I don't think it's a case because that lender quote me higher, right? So sometimes things like that is switching bait or they they try to scam you in in one way or another. Okay, finding discrepancy in the terms and the condition. Okay, anything in the loan terms, rate, the number of years that you pay, any PMI or anything like that. Okay, find any of the discrepancy in those and make sure that they are matched up, or What happened if my loan, my rate is only 5%, but my APR is 7%? What's going on here, right? It need to be fully, explained. Okay, asking you to falsify or leave out information. Okay, why do you ask me to like not providing this? Okay, I believe like when I'm applying a loan, I need to provide my W-2 if I have W-2, right? Why are you not telling me that, not showing that, right? Something is going on here. Dodging your questions. Why you are not answer my questions? And you try to steer me away, right? So those are some of the red flags that a borrower as well as an MLO need to keep in mind when working with some fishy lenders. Okay, continue with fraud detection through advertising. Types of false and misleading advertising include bait and switch advertising. There are people that are actually doing that, okay? Because due to the competition out there in the real world, right? Somebody say, I'm offers 5%. Why you go with that guy 7%? Right? It's called bait and switch. And once you go in here, and now, your 5% gonna cost me like 3% points fee. Okay, that's not 5%. Your APR is maybe 7% now with that fees, right? So those are bait and switch, and it's happened a lot. Believe it or not, recently I'm quote a loan, okay, and the best that I can get for this borrower is 6.375 for $4,000 cost. Okay, but somebody give him like 6% for 2,000 cost. How is that even possible? They gotta be bait and switch. So, but anyway, so those are tactics that people are doing, and borrower they confuse, right? Because there's so many people out there. There's so many lenders, so many loan programs, and they don't know who to trust, right? And I do have borrowers, that actually running around try to find the best, but they never know that the one that actually helping them is the one that give them the best offer possible, or at least they are trying to, right? If they say, hey, if you found out somewhere else that get a good rate, bring back the loan estimate and let me take a look at it. Maybe I can beat it, or maybe it's just a bait and switch, right? But I'll try my best to help you out. So try not to use the bait and switch advertising. It's not good for your business, right? You want to build a good reputation, and you want to keep doing business in this industry, right? Because one bad file gonna potentially ruin your entire career. Okay, so be careful. High pressure sales tactics. Why do you keep pushing me? Let me breathe. Okay, because like they try to lock you in something before you go and check somewhere else. That may be one reason, or they want to close this quickly, get their commission. That may be another reason why they're pushing you. Okay, false advertising, right? People are sometimes marketing some product that they don't even own, right? So those are false advertising. Potentially misrepresentation about government affiliation. So maybe you have seen that letters come to your home with like a government seal, but marketing for a VA, marketing for FHA, right? The way that they put together the letter, even the envelope outside of the letter, look like a government thing, but it's not. So gotta watch out for those and don't practice those tactics. Okay, you cannot misrepresent the consumer, thinking that you are part of the government affiliation. You may get in jail with that. Okay, potentially inaccurate information about interest rate. It's always okay. Some people just want to get the client. They misrepresent it. Now, once the client is on board, then they just throw out there like a higher number. Potentially misleading statements concerning the cost of reverse mortgages. Okay, Say, hey, take this reverse mortgage. Right? All you do is just get money and then spend for your life. Right? Not knowing there's associated costs with it, and guidelines, limitation, and requirements for taking out the reverse mortgage. Right? You gotta be how old to get a reverse mortgage? Anybody remember? 62. 62. You gotta be 62. You 52. You're not qualified. Okay. Um, Believe it or not, you know how much someone can make if an elderly couple taking out a reverse mortgage program? I haven't done it, but they heard like 60K for one loan, a commission. That's crazy. $60,000 for one reverse mortgage loan. Yeah, I don't know. I don't know if we're able to tap into that market yet. But believe it or not, baby boomers getting old, and they have a lot of inheritance if they don't have any children, and they don't want to pay the mortgage no more, right? And they may take it, they may take a reverse mortgage, and then it's good for them, and also good business for you too. Okay, I haven't explored in that area. I haven't tried it, so maybe I should. Okay, potential misrepresentation about the amount cash or credit available to a consumer. Okay, so these are all possible advertising tactics that actually harm the consumer, right? So need to watch out for these advertising, and don't use them, right? If you're a good MLO, ethically you shouldn't do it, right? When you think about it, then stop. Okay, don't even take one step further. Okay, misleading information include inaccurate loan programs, due diligence review, right? Advertising non-existing product, unfair and deceptive or abusive act. UDAP is an acronym that refers to unfair, deceptive, or abusive acts or practices by those who offer financial product or services to consumer. So sometimes some lender out there, um, they use like unfair tactics, some deceptive information representation, or they even abuse using some abuse practices to force a borrower to take on like a maybe high cost loan, high fee loan. Okay, acts or practices that may be deceptive, including making misleading cost or price claims, offering to provide a product or service that is not in fact available. Okay, the product is not there, right? You don't tell me the exact cost of the loan, right? You just hide it everything until I see the final CD. By then, I don't even read it, right? Using a bait and switch technique, omitting material limitation or condition from an offer, or failing to provide the promised services. So these deceptive and then unfair abusive act, actually got protected. The consumer got protected against these by the TILA, Dodd-Frank, UDAP, FTC. FTC stand for Federal Trade Commissioner, I think. CFPB, right? So these are the law as well as government agency enforce, these tactics. If anybody get caught, then they in big trouble. Okay, so like I say, there are majority of I think the last time we heard about this is 2008, right? When there are lenders that try to use the including loan officers try to do using a predatory lending and steering, right? Try to make the person take on a loan where he or she may not qualify, or it's a high cost, right? It doesn't benefit the borrower at all. So a sign of predatory mortgage lending include big fees. Sign number one, big fees. Sign number two, penalties for paying up early, or why do I have to pay penalty when I have, when I have money to pay? Okay, because prepayment penalty is only a first couple of years. If there's some program that when you take on the program, yes, you have to pay for several years. But if you prepay, for that many years, for 3 years, then you may have to pay some penalty. But if there's a program that charge you for a 4-year, 5-year, 6-year prepayment penalty, then it's a predatory mortgage lending. Okay, inflated interest rate from brokers. So brokers may be, pushing up the rate, and one group push it up, the other group follow, push it up again, and that's actually hurt the consumer. And also some tactics, including sign number 4, steering and targeting, right? You're steering people away or steering people into or targeting this client by providing this high rate cost, loan. Adjustable interest rate that explode. Okay, if the person doesn't have the ability to repay, right, to begin with, when you review the loan application, you know that if this loan that you offer to the consumer, and when it's like adjust, then this person not going to be qualified to repay. So meaning that, even if you offer an ARM, right, adjustable rate mortgage loan, you need to see if this person is qualified when the rate is capped, right? Because that's why we get the cap, right? The maximum cap, or the lifetime cap, right? Make sure that at the lifetime cap, this person is still able to make a payment. Then yes, that is an okay. Otherwise, it's going to be an explode, a shock, payment shock, and that is, predatory lending. Sign number 6, promises to fix problem with future refinances. Don't worry, just buy it now, right? 6 months down the road, you're gonna able to refinance, right? Believe it or not, I often tell people that too. But when I'm looking at that, if you are qualified to buy this property at at your current income, your current DTI, low debt, right? And right now, if you can afford it, in future, if the rate going up, you already locked it in. But if the future, the rate going down, yes, you can refinance. But as long as right now you are qualified for it, right? You cannot say that, hey, in the future the rate going to go down. You can refinance it. Even right now, you are not qualified to borrow it. Probably just go with the high loan ARM, and then you refinance it down the road. That was what happened back in 2007, 2008. A lot of people say, okay, I'm not qualified for the conventional loan. They just take the ARM, right? You're not going to lose any ARM. Just refinance 3 or 5 years from now. And guess what? When 2008, the interest rate going up like crazy, these loans just explode. And then a lot of people, losing home because they don't qualify to, with their income, they cannot pay. Even they don't lose job, but with their income, they cannot even make a payment, right? Just because the rate is actually got readjusted. Every year, you probably remember yesterday we talked about it, right? For the caps, right? 226, 221, things like that. Okay, promises. No, I already did that. Sign number 7, repeated refinances that drain you. So loan officer just say, "I can refinance now." Oh, it's already 3-1. Let's refinance again. Oh, the rate going down again. Let's refinance again. And just every 3-6 months, this person just keep refinancing. And guess what? They don't have the benefit of refinance, but they pay a lot of fees for it. Okay, so those are predatory mortgage lending. Unless if you can show this person that, hey, if you want to take a loan now, and you think that down the road you're going to refinance, then at least take a loan with less cost. less closing costs. Higher rate is fine, right? Because the need that you currently have, you need to have some money to do something, either to renovate your home or to refinance cash out or to get money and buy another home, right? If that need is here, but you need to take the money out, right? And down the road, you may refinance it. So right now, don't take any loan program that pay high fee, like 10K, 20K, a fee, right? Just take a higher rate, but low fee. That should be okay. And then when the rate drop, then you refinance. Okay. So those are good advices that you can give to the borrower instead of try to refinance and get your commission out of it. Okay. Not counting taxes and insurance. Oh, don't worry, you are qualified for this mortgage, right? You're able to you make 4,000 a month, right? This mortgage is only 3,500 a month. You get $500 now. I hope that you're able to get that 500 for your, kid milk, diapers, food on the table. And guess what? What about tax and insurance? Where do you get the money out from that? Because taxes you pay twice a year. Let's say $6 grand, $8 grand a year. Okay, how are you able to get that with $500 left from your income? Beside the mortgage, right? So those are predatory mortgage lending without take a look at the whole DTI, right? You need to take into account of the debt to income ratio. Okay, and it's 43% is the best. Sometimes 45 is okay too. Oh my God, I'm early today. Q&A. Thank you, everyone. So anybody have any question for me? Anything?
Yeah, so if two loan officers can they get the referral bonus when they refer client to each other?
Nope.
No.
Nope.
Let's say
I
have a license here in California, but I have a client in Texas. So I send that client to another loan officer in Texas. So even though I cannot get that referral bonus.
Nope. You cannot get a bonus. Only realtor can, not loan officer. Remember that.
Okay. But in case a realtor refer a client to a loan officer, they also cannot get the referral bonus, right?
No, the realtor. Oh, you mean like from the loan officer to a realtor?
Yeah.
Or realtor to loan officer? Nope, they cannot do that.
Right.
Both of them. Nope.
Just
only realtor to realtor. Yes.
Oh, got you.
Only realtor to realtor. Okay.
For
realtor is the king.
Yeah. Right.
Yeah, because you saw that earlier that in order to refer, there is a proper channel, a proper form need to be filled out, and both of the brokers of the two sides of the referral need to sign. The agent don't sign, only the broker sign. The agent name is on the form, but the brokers are the one that sign. Broker of both sides. Right, the one that get referral and the one that refer. Okay, good. Any question? So that's why some people get licensing in different states so that they can practice in different states. If you get California, Texas, Washington, Florida, Texas, then you can practice those states. But if you have an investor that want to buy an investment property, right? Then it's considered it's a DSCR loan. And if it's a DSCR loan, you can do anywhere in the 50 states of America. Because you don't need a license for DSCR, investment property. Okay, anybody have any other question? Okay, if you don't, I'll see you tomorrow. Have a good day, everyone.
Thank you.
Thank you. Bye-bye.